China's mutual fund industry has kicked off 2026 with its busiest fundraising week in nearly 3 months, a striking signal that investor appetite is roaring back to life. In the first week of January alone, asset managers launched 45 new fund products for public subscription. That's a 4-fold surge from the previous week and the most crowded pipeline since mid-October. Equity funds led the charge, accounting for 30 of these new launches. For now, the cash is pouring in. Mutual fund assets under management swelled to RMB 36.96 trillion, around $5.31 trillion at the end of October last year. That figure has almost certainly grown since. The opening fortnight of 2026 has only intensified the frenzy. Multiple equity funds have already clocked gains exceeding 30% in just 2 weeks. This fundraising frenzy isn't happening in a vacuum. It follows what can be described as a banner year for active fund managers across the country. By the close of 2025, the average actively managed equity-oriented mutual fund had delivered a staggering 32% total return, the strongest calendar year performance since 2020. But that's merely the average. The elite performers did considerably better. The top 20 best-performing active equity funds posted an average return of 141.87%, more than quadrupling investors' capital in a single year. At the very pinnacle, one standout fund topped the league table with a 233.29% gain, turning every RMB 10,000 invested into over RMB 33,000 in just 12 months. The product innovation engine hasn't slowed either. Throughout 2025, fund houses listed 363 new exchange-traded funds, with thematic strategies capturing the lion's share of inflows. Funds tracking technology, new energy, and healthcare names proved particularly popular, reflecting China's structural economic priorities and investors' conviction in these long-term growth stories.